Hi, I'm Garth Mackenzie, founder and editor of traderscorner.co.za. This is your weekly look at the S&P 500 and the Nasdaq indices. So as usual, we'll start this broadcast with a look at the S&P 500 daily chart. And on that chart, you can see that the market has actually broken out of the upper end of a triangular pattern, which is bullish. It's above all of the moving averages there, which is encouraging, above the 15 exponential moving average, above the 50-day moving average, and above the 200-day moving average. So whilst that is the case, the trend is still very much up over here. And that triangular structure points to a target which correlates more or less with the prior highs that we saw in the middle of February. One last point to note about this chart is the RSI, the relative strength index at the top there. And what you can see there is that the RSI is remaining above 50. And that is always a good indication of the strength of a trend. If a trend is strong, then typically you'll find that your RSI stays above 50, as is the case here. And you can see that the RSI turned up off of 50 last week. If we then zoom in a little bit more closely and we take a look at the hourly chart of the S&P 500, there you can see that triangular structure that I was referring to more clearly. And what's quite nice here from a pure textbook technical analysis perspective is that you can see there are four very clear waves in that triangular structure labeled 1, 2, 3, and 4. And then the fifth wave typically is the wave that breaks out in a triangle structure. And if you get that fifth wave breaking out approximately 2/3 of the way into the apex of the triangular structure, then that is a textbook triangle breakout, which is what we've seen over here. To get the target projection from a triangle breakout, you take the height of that pattern at its broadest point, which as you can see there is indicated by the labeling of 270 points, and you project that distance up from where the breakout occurs. Now that breakout occurred at around about 3120. So if you add 270 points to that, gives you a target of about 3390, which is actually just slightly above the February highs that we saw earlier this year. So notwithstanding all the negative economic news in the world at the moment, like we always say, you've got to trade what you see, and what we see right now on this chart is actually quite a bullish technical structure. So we've got to give it the benefit of the doubt until it proves otherwise. If we then move on to the Nasdaq 100 index, we start here with a look at the daily chart. And there you can see quite clearly that this index is still in a very nice, neat, upward rising channel pattern. Last week, I identified a little consolidation, a pullback into the bottom of that channel, and said that it looked bullish as long as the channel remained intact. That channel has very much remained intact, and you can see the market has broken up to new highs now, so new all-time highs for the Nasdaq, which is obviously stronger than the S&P 500 that we were looking at a moment ago. That index now is pushing up against the upper boundary of that channel, so some consolidation here wouldn't be an entirely surprising event, but overall still a very bullish chart structure. And if we then zoom into the Nasdaq hourly chart, there you can see the upward channel that I was referring to just in greater detail. And you can see how this channel is very much intact. There are a number of consolidation, continuation patterns within that channel structure, which have ultimately all broken to the upside and continued with a rising trend. Now, the market is fairly stretched at the moment. You can see the RSI at the top there is in very overbought territory. And in the last couple of weeks, when we've seen the market up in that really overbought territory, it does tend to precede a little bit of a correction, but not anything significant, just a nice healthy pullback and a nice consolidation in the pricing action. So overall, still a very bullish chart setup here on the Nasdaq, but one wouldn't be surprised to see a little bit of a consolidation in the near term. And ultimately, if the past patterns are anything to go by, one would look for a pullback or a continuation pattern in the next week or two as a potential to then re-engage this market, buy it with a look for that upward trend to continue. That's all I've got for you this week. I'll be back again next week with another look at the S&P 500 and the Nasdaq.